on the audio part.
Oh boy.
Oh boy.
Maybe I'll look at our settings. Hey everybody, welcome to Indiana Success Happy Hour. Brian Quinlan here from Daniels Real Estate.
Brad Niccum from Nest Mortgage Group, and this is going to be kind of a real estate one too.
Oh, real estate edition. Excellent. All right. Well, I guess our guest has something to say in terms of real estate and finance, and who the hell knows. Sir, tell the folks who you are.
Hi, everybody. I'm Al Soriano. I actually work for AD Mortgage. I'm visiting from the Detroit metro area today.
Did you come down just to be on our show?
Just to hang out
Okay.
with Brad.
Yeah,
and it was nice to meet you too.
That's fair. Thanks,
Nice.
man. I appreciate
Nice.
that. Well, thanks for being here. It's a pleasure to meet you, and I look forward to this episode. Brad's pouring his beverage, so I'll start with mine. If you look closely, that is kind of a pinkish lavender color. Visited my friend Kevin Smolar at Sun King, and he hooked me up with this. And I'm not usually into this kind of thing, but it's a tart beer, Brambleberry tart, and it's called Midnight Monsters. And I figured, this is going to come out right around Halloween. This is a good one to have for the show.
Yeah.
So
Well, Brad,
not
you poured me
not
this.
overly
This is
tart. Yes,
delicious.
that he poured you a yellow glass of tequila.
Well, if you come out this color, you better see a doctor.
It's a good point.
You got a bladder problem.
If you've seen the show before, you may recognize this here bottle of Fortaleza. Which type is it?
I got him the añejo.
The Añejo. All right. And you have not had that before, correct?
No, I have not.
And thoughts on the Fortaleza?
It's absolutely delicious.
Yeah.
But he's never really steered me.
Yeah, it's
So,
true.
yeah.
It's hard to get a bad chunk of tequila from this side of the building.
That's true. I don't care for tequila. I'll drink it because, Brad forces me to. But I've definitely learned about tequila. And I know when people talk about tequila, like, I'm trying to find a good tequila, I can usually rattle off about 4 or 5 of them. Fortaleza is always first one out of my mouth on that one. So,
And you've had Fortaleza.
I have.
And if you were going to have a tequila.
Honestly, if it would be on the short list of tequilas, I would say, yeah, I'll drink that.
But one thing I always appreciate is like when I visit Brad, the education.
Oh,
that
for
comes
sure.
Along with this and also your travels, right? I mean,
Brian's tired of the education part.
Oh yeah. It's just a matter of retaining all the information.
That's the thing. Like he says things like, I've said that before. Like, dude, I don't remember.
I like that. Brian and my wife have one thing in common. Oh my gosh.
I don't know about Tony, but it just kind of rolls like water off a duck's back. I hear some of it. Yeah, the rest of it
You should just leave me with like a laminated index card.
That's a pretty
go
good
with.
idea.
That'd be
So,
great.
Yeah.
We'll add that to the
Some cheat
repertoire.
sheets.
Here's what we're going to talk about.
But after that 6-mile run, your sinuses were opened up and you had a glass of Fortaleza and
you
you
are
were like,
correct.
holy
So
cow,
like
this
that-
is really good.
Yeah, absolutely. So
And you said you just got your taste back.
I did. Yeah, I had COVID for a few days, a couple of weeks ago.
All right.
And after a couple of days, I'm like, I don't really taste anything. And those who watch the show know my sense of smell and taste is not very good anyway. But I mean, it was
Now,
just
had that happened before?
gone. No, that's the
Wow.
first. Yeah.
Okay.
And so I was like, I think I just pretty much have muscle memory for things that I think I'm tasting, but for the most part, I had nothing. So
Pizza.
I know it just, yeah, I'm like, I guess I'm done eating because I don't taste it anymore. And I really don't
Just
feel like
cardboard.
pretty much. Yeah. So I lost a little weight. So there was that.
Well, you gave it to me because I didn't get
So it
COVID. I didn't
seems,
get
yeah.
sick or anything, but I lost all sense of smell. So I have to do a tequila matchmaker blind that's actually due in
Oh,
a
boy.
day. So I tried to do it before we left, and I'm like, nothing. This smells like nothing.
Yeah.
And so all 8 of them are not. There's 10 of them. All 10 of them smelled exactly the same, like air.
Uh-huh.
So I packaged them up and I took them to Cabo, and I thought, okay, I'll do them in Cabo.
Do them after a run in
So
college.
I ran. I did a 5-mile, 900-foot elevation run. I came back. I popped them open, and I smelled nothing.
Oh, no.
So
But your taste wasn't affected at all?
no, I can still taste, and I can still pick out. Probably not as well as normal. I was still picking up, what I was tasting, but not to the level. And so the last day, I actually had a little bit of smell back. So I made Blake and Tony sit, and I smelled them, and then they would smell them and confirm or tell me things they smelled to kind of help.
Okay.
And then last night when I got home, I did read a thing that if you lose your sense of smell, there's a couple of things to do. One of them is take omega as a supplement.
Like just omega 3.
Omega 3. the big
Is there
fish
more
oil
than
ones?
anything?
I don't
Yeah,
know.
that's omega-3. Are there other omegas that aren't 3? I don't even know.
That was at least there's 1 and 2.
Maybe, I don't know.
Well, what is it supposed to do? Is it
Well,
supposed to just
it's supposed to help, and then also said take vitamin D.
Okay.
So I took
Just go out in
everybody
the
needs more
sunshine?
vitamin?
no, I doubled up. I think you're only supposed to take 1, so I took 3 Ds and 3 omegas,
That'll do it.
and
So you DO'd.
I did, yeah,
Yeah.
that's fantastic. And last night I thought, okay, I need to do some reviews and get caught up on some videos, and I grabbed a thing of tequila. I was like, oh, I can smell it.
Oh, it worked.
So
Okay.
yeah, so maybe being home and being because I have the air purifiers and stuff, maybe that
Wow.
helped. But
Maybe I'll add a little omega-3 and vitamin D.
some vitamin D,
my
DO.
DO or OD. However,
No, OD,
we have
so-
yet to talk about this tequila over here.
Well, that's because it's Carrete de Oro, which is a fantastic tequila in the town of Huatateclan.
Sure.
And I will be visiting Huatateclan on Friday and Saturday.
Had you
next-
been there before?
Never to Huatateclan. No, it's took me the whole year to learn how to say it properly. Huatateclan.
That's great.
It's a hard one. Like I thought the Nico, that took me a while too.
And what are you going down there to do?
So I'll be going down with Couture 100, NOM 1414.
Yeah, that on the last show.
Sergio Cruz made tequila. We're doing a bottle opening party,
Okay.
and they're going to be bottling their second batch. That's batch 1. And I had a couple of extra days on this trip, and Ronak, one of the owners of Carrete de Oro, said, "Hey, if you're going to be a couple days extra, let us put you up in Huatateclan and come to the distillery and
Well,
go to eat." And the next day they'll drop me off at the Guadalajara airport, and
Well, hot diggity.
Yeah.
All right. Well, cheers to you, my friend.
cheers to you.
Cheers, Al.
gentlemen. Cheers, Al.
And cheers to you. All right, Brad.
Hmm.
Al is your guest. How would you like to start this show?
Technically, Al is our guest.
That
This
is
is
correct.
our show.
That is correct.
So Al is one of the best account executives I've ever worked with. And I know that if this guy sold anything or any business he'd be in, any customer of his would say he's the absolute best at it. He cares about his customers. He cares about the business that he does, his reputation. He always gets back to you. If you have to leave him a voicemail, which isn't very often because he answers the phone, he gets back to you right away. You never go through the day without hearing back from him. And he's incredibly knowledgeable about the mortgage industry, and which is really helpful when you're on the side that we're on as a correspondent lender, and we're talking to the people that are going to be purchasing our loan, and you have a question, he gets the answer for you every
Nice.
freaking time, and he stands behind his answers. And he made a big switch in the industry recently by going to a company that is what we call a non-QM company, which is doing loans
is
that
what?
aren't conventional
What does
or
QM stand
FHA,
for?
qualified mortgage.
Yep.
Okay.
And so it's kind of what we used to call the non-conforming world back in the day.
Exactly. And basically, it's an opportunity to provide more lending solutions, right? So you've got, again, we've talked about conventional loans, financing, government loan financing. Now this is just the opportunity to capture a wider net, right?
Okay.
So AD Mortgage, again, we joined up with them in April. We were acquired, former Flagstar Bank, a bunch of us. And, it's been pretty exciting the last 6 months. We've got a lot more opportunities to say yes to our loan officers and the realtor relationships that they have. So it's funny, I think, especially right now, given the market, I know we talked about the uncertainty, the affordability, the lack of inventory, or even increased inventory, just the buyers. It's a great opportunity now to even just have those conversations, knowing that there's other products, other solutions that can be offered.
That's one of the things that's been on my mind lately. I'm a mentor for the new agents on my team. And so one of the things that I want to talk to them about is, okay, what about the people who can't do the ones we talk about all the time? Can't do conventional, can't do FHA or VA, not USDA. Other than cash, what other options are there? Is there like a list that you could say are options, or is it scenario dependent?
Yes, actually, yes to both.
Okay.
Actually, right?
Yeah.
I mean, you can
It's the
have
wild, wild
Yeah,
west.
exactly.
Okay.
And I'll speak for us. We've got multiple products, multiple income types that you can utilize. And you're right, every scenario can be different. And speaking with realtors and other loan officers, um, this is stuff that's out of the box, but I guess someone explained to me, I don't know how many months ago, they've applied commercial lending standards to basically residential. So if you've got a self-employed borrower that depends on cash flows for the business, you can look at that. You can have a person who's heavy in assets and qualify for a mortgage just using what they've got saved.
Yeah. Okay.
Interesting.
Is that similar to like the Fannie Mae's
Exactly.
asset
Asset
depreciation?
utilization.
Yeah,
and
asset
asset
utilization.
Yeah. So what's, as a unique thing for us, like Fannie, Freddie, they'll take the amount of assets and say divide it over 240 months or 360. The opportunity with us is that you can take that number and divide it by 60 months.
Oh, wow.
Oh, no
So
kidding.
that one, the opportunity to qualify, again, afford, and potentially get that bigger home, right? So another avenue.
What if I have a 580 credit score and I want to do no money down?
That's not going to happen.
Thank you for saying that, because that's what most people, when they look at subprime, they're
True.
thinking old school. These people can't qualify for anything.
Mhm.
They don't have a job, they don't have credit, they don't have any money, and they have $10,000 in collections, and they've never paid their rent on time. But I would love to sell them a house. Can you do that on the non-conforming side? In 1998, the answer was sure.
Anything goes. Yeah.
In 2025, it's no.
No, I mean, now though, and again, what's common is that most people know that in order to buy a home, you do have to have a downstroke, a down payment, decent credit, savings ability. With these products, it's no secret you have to have easily a 20% down payment and some money in the bank. But again, like you mentioned, Brian, right? You speak to your realtors, and they get to talk about everything now, right?
Yeah.
They can even educate and coach those borrowers, or you can coach the future homeowner and say, hey, we've got these great programs. We know you're 22 years old. We know that you've been at your job for a year and a half. Keep stocking that money away, and there's opportunity.
Yeah. So with affordability, which we talked about earlier, do you think we're going to see an expansion of longer term mortgages? And do you
When
think,
you say longer term, like longer than 30?
yeah,
Okay.
30s, 40s, 50s?
Okay.
And do you think the re-implementation of interest-only loans, which are now coming back, are going to cause us to have issues in the future? So that's two questions.
I don't think necessarily cause issues. Now we do offer 40-year mortgages. We do offer interest only, but the balance of it, right? We're talking balance of risk. You can get these loans, but you're also invested in this too, right? You're coming in with money. So you're not going to get 5% down for $1 million. Maybe you can. I don't see it.
I've been looking for a 10% down on a $3 million for a customer with 800 credit scores, and it does not exist. Period.
I mean, it's funny because you and I talked about that earlier, right? And I immediately,
you're like 20%. It wasn't even a breath. I was like, I've got a $3 million with 10% down, 20. We can 20.
Yeah. Brad, okay. I'm not going to go to you and just be like, you know what? Hang on, Brad. I'm going to check this out. I'm going to free to call you back in 20 minutes.
It's been hard to find 30% down on $3 million. Like in the old days, though, that was 10%. Easy.
Oh,
probably 5% back. Well, you just didn't see $3 million.
Stated income, stated assets.
Yeah.
All the money you want. Doesn't matter.
So excuse my ignorance. An interest-only loan. Can you explain that? It sounds like only? I know, but that sounds like, why would someone just get a loan and all they're going to pay is the interest? Like, how the hell does that work for somebody to buy a house?
Well, I guess the situation would be, as an example, let's say you've got someone here, a professional that's going to be working for 3 to 4 years for a corporation in McCordsville, Indiana.
Okay.
Right? They can go on an ARM product an interest rate, whatever that rate is, 6, 7, 8%, whatever, but get the opportunity to pay interest only on it. But knowing that they can live off or be comfortable with the appreciation of that home over 3 to 5 years and just pay a minimum monthly payment on the interest, on just the interest.
But so like a home equity loan, they could pay extra
Anytime.
and it's going to get you to pull it down. Does it? Okay, so you don't know if you'll remember these loans, but the fixed pay 60.
Oh, geez.
Remember the fixed pay 60 from WAMU?
I do not.
No, I remember many
Okay, so
aggressive products.
fixed pay 60 was it was a five-year arm. It was interest only for 5 years. Then it adjusted out and became a loan that you paid. But every month you got a statement, and it wasn't only interest only. It was like a 2% rate for your payment. So you had 4 payments you could make. You could make the 2% payment, which meant every month you weren't even covering the interest on the home.
Oh,
It was wasn't it deferred? I think it was added to the
It was deferred to the back. Yeah.
the back end of the loan. Yeah.
Yeah. So you had your 2% payment. You had your interest only payment.
Yeah.
You had a 30-year fixed payment.
Yes.
And you had a 15-year
There was another.
payment.
Yeah, there was another name, but I know what you mean.
They called it the fixed
Yep.
pay 60,
Yeah.
right? Because it was a fixed 2% payment for 60 months. That was what you were selling. You were selling that, and you qualified off the 2% rate. So you qualified them on the lower rate. So they couldn't even qualify for the other rate. That loan isn't here anymore.
Hence,
Neither is
yeah,
the company that
hence
did it.
hence the introduction of regulation and
Right.
and
So on the
qualified
interest
mortgage.
on the interest only payments, does it give people an option to be able to know what a 30-year payment is or what a 15-year payment is, or is it just your interest only payment?
Actually, I believe it must be disclosed. I could be wrong. I couldn't give you a definite answer, but I believe it would have to be.
Because you don't have one.
I don't have.
You're not doing an interest only deal.
No, we do have interest only.
No, I mean, you personally
I
don't have one.
No.
You can't tell me what this statement looks like.
I could tell you back in the day what it looked like.
Heck yeah, you
It
could.
looked like a low monthly payment.
It did. So do you think we'll see longer term? Well, let's talk about your 40-year term. So people right now can buy it. Is it a true 40 where it's amortized over 40 years?
Yeah, 40-year amortization.
So it's not a 4360 or 4280, or you know what I'm talking about.
Yes.
I don't.
And how many years are in 40? How many months are in 40 years?
480.
Okay, so if you have 480 months, but you may have a loan that's amortized over 480, but due at 360. So you balloon at your
Gotcha.
360, or
Yeah.
there were a lot of 360 280s back in the day, or 360 180s back in the day, where you were ballooning people out, but you amortize over a longer period.
Got it.
No, I'm curious with you guys. Are you seeing opportunities for helping borrowers from a down payment standpoint?
You know,
or-
so
I don't know.
as a loan officer, I don't have any down payment assistance programs.
All right.
I feel like I watched, hundreds of people lose their homes utilizing DPAs back in the day, and they're so riddled with, you have to own the home for 5 years before you can sell or refinance, or you got to. Then this isn't a dog on realtors. Don't take it this way. But you got realtors out there going, "Oh yeah, do Indiana housing. It's no money down, and you can refinance as soon as rates come down." Well, no, you can't, because you got a grant payback in 5 years. So now it's a cash out loan, not a rate and term. So, and Indiana housing won't.
And there could be a potential lien on that home.
Yeah,
if you
there's
tried-
a lien on it, and they won't subordinate a new first, so you can't refinance. So if you bought the house, now you can't refinance. If you bought the house and you get transferred, you can't call your realtor and sell the house. You have to give it back to the bank because now you owe too much on the house. And I'm sure there's gonna, out of the 6 to 8 people that watch this, there's probably one that's gonna go, "That's not true. You can do this," and that's okay. Put it in the comments because it helps. But so I just have taken a stance on, look, in my personal belief, if you're not a veteran or you're not buying USDA, you need to save for a down payment. And if you can't save for a down payment, you probably can't save for that furnace, that roof, or that water break, or the plumbing issue that you have, or the electricianal work that you had, or mow the yard.
What about opportunities with investors, Brian? Have you dealt with
I actually
various
know,
investors? No?
Yeah, I have a few investors that reach out to me, but I've yet to work with any, to be honest.
Oh, okay.
Because you do have DSCR loans,
Yeah,
right?
and I think and again, going on those same lines of, creating those opportunities, or maybe even just making sure that everyone knows that these are out there.
Sure.
Is that, if there's people that want to rent, want to buy an investment property and rent a home for the first time, right? We've got the opportunity to provide first-time homebuyer financing for people that want to go down that road. Again, pretty much if you know that based on your knowledge and the market analysis, right, as far as what you can get rent for on a particular home, and depending on what that financing looks like, if they're covered 1-to-1, right, you're able to get the rent to cover the mortgage payment, they can get that home. You can close on that home as an investment property.
Is that using like a DSCR loan?
Yeah, the DSCR.
So explain what a DSCR loan is, because it really, to me, it's a commercial loan for a residential property.
Yeah,
right?
it stands for debt service coverage ratio. So basically, are you getting the rent to cover the mortgage payment? That's it.
And if you are, then I don't have to count that in your debt to income ratio.
Yeah, that is the ratio. There's
Right.
no income.
There's no debt to income ratio.
They don't look at employment
They're
income.
only looking at income from the property.
Only looking at what you're covering on that payment.
And is that a market rents on appraisal?
They call it a comparable,
Yeah.
on appraisal, comparable rent schedule.
Yeah.
So again, it's out there. It's been out there for, I want to say maybe 2-3 years, maybe longer. I know our company, AD Mortgage, has been doing this for 20 years.
Down
Right,
payment on those?
Yes,
How much?
20%.
Okay.
20%.
So what kind, is there a prepayment penalty on those?
You can have
But you could
that
buy it
option.
out as the buyer?
Yeah, you
Okay.
can do both, like 3-year, 4-year, 5-year.
And are those 30-year fixed? Are they ARMs?
3-year fixed.
Okay.
Yeah.
And
There's other.
so let's say conventional rate today for a 30-year fixed investment property, 20% down, it's probably on a couple $100,000 house. It's probably in that 7.25% to 7.5% rate. The DSCR loans, comparable rates.
You know what, Brad? I would say comparable, maybe just a little bit higher.
Okay.
Again,
Which is normal for
it
something
would be a
that's
little bit
outside
higher,
of that
but you have to
box.
remember, conventional, you're coming in with income,
Everything. Oh yeah.
qualification,
It's a
asset
it's a
qualification.
fiscal colonoscopy.
Yeah,
Yes, it
exactly.
is.
I mean, you've got your, again, papers, a bunch of papers.
And how many of those can you have?
What do you mean?
Well, like with Fannie and Freddie, you can only have 10 mortgages.
Yeah. Oh, I want to say, well, we've got, I believe there's a cap. Yeah, you're putting me on the spot, but I know there's
We
a
are.
cap on the number of financing.
Probably the number that you'll finance, but
Yeah, like a
probably
dollar
don't care
amount.
about the
I
other
believe
people.
there's a dollar amount,
Right.
but as far as like the number of homes, I think if I'm guessing, maybe 4 homes.
Okay.
My manager might kill me, but
I did. What's your manager's name?
manager's name is
I'm
on
putting
the
them on the spot.
Lisa
Okay.
Lacey.
Hi,
Hey, Lisa.
It's the tequila.
That's
The
what did it.
tequila.
Yeah, it's the Fortaleza.
Absolutely.
So on the longer term loans, I've read a couple things that people think that they're going to bring out 50-year mortgage,
50?
and that's been a talk.
Yeah, that's.
And I've heard talk that conventional
They
may
do some
add,
crazy stuff here in Indiana.
well, none of it's in Indiana. They usually talk about it coming to California
Oh,
because
California.
40-year mortgages have been in California for quite some time on the subprime
Okay.
side, right? But can I do a 40-year in Indiana?
Yes.
Okay, I didn't know that we
Yes.
could do those.
Yes.
So do you think conventional will ever lengthen out like that? And do you think that the subprime will go even further?
Well, I don't think we should call it subprime.
Well, yeah, non-Q.
I know what I
Sorry,
know.
non-Q.
How about non-conventional, non-conforming?
Non-conforming.
Yeah, whatever.
Whether non-QM sounds better than even non-conforming to me is subprime in my
Well,
head.
non-QM is not even lame speak, right? This is
But it's true.
It's
Yeah, you're
basically,
right.
It's basically,
It's
now,
mortgage lingo.
it's
jargon
mortgage
over
lingo,
here.
but I think the person basically, it's come down to where, hey, can you get me a house? No different. Can you get me a car?
Right.
What's that payment going to be?
Sure.
It really,
I gotta go talk to my manager.
But
Yeah,
with
to the
home
finance
with
guy.
home prices growing so much and affordability being such an issue, that's one of the things I read was that Fannie Mae and Freddie Mac were actually considering to make homes more affordable, extending terms to a longer amount. They didn't say 40, but I'm thinking, okay, well they're not going to go to
could you
31.
imagine? Do you have your calculator? What a payment would be on a 50-year amortization?
I mean,
That would be.
it'd
Got
be
your fancy calculator? Is it upstairs?
No,
no, I have it right.
no, yeah. But I'm just thinking
This will be fun.
that would be pretty amazing that if
it may make that $400,000 house more
$400,000
affordable.
home
Right. So
over 50 years.
let's take a $400,000 house.
I mean, with cars, right? It used to be the standard was what, 3-4 years?
yeah, now it's,
Seven?
7 years.
Yeah, 7.
So we're going to put down 5%, 20 grand. So we're going to $380,000 loan. Don't like this calculator because you can't feel when you push the button. And let's call it a 6% rate. Okay.
Sure.
And then a 40-year use is 480 months.
It is.
So the payment on that is $2,090.
Wow.
So what is it on a 30? $2,278.
Oh. Well, not even a couple $100.
Yeah.
What would be
Not
50?
great savings.
But what's 50?
600.
600. Now you're at a $2,000 payment. So $90 off. 10 more
So
years.
it's really maybe that 30 is the magic number, right?
Yeah, it might be because that's not
Yeah.
a big difference.
No.
But on the banker side, that's a nice return. Although the person's going to keep their mortgage
I don't
average is
believe
7
there's
years
a whole lot of revenue in servicing a mortgage
for 50 years.
for 50 years. It's just like,
No?
no, I don't.
No.
I'm Brian, your Indianapolis realtor. If you are looking to buy or sell a house in the Indy area, I'm your guy. If you're coming from out of state, want to make a move to the Indy area, I'm your guy. Check out the show notes for a link. We can get in touch and get you started. Thanks for watching. Now back to the show.
Well, I read a thing about that. That was a potential proposal at some time to help people realize that homes can be more affordable. I don't think it really makes them a lot more affordable.
Doesn't seem that way.
Yeah.
Getting rid of property taxes would make homes more affordable.
I would say yeah.
Yeah. And
Yeah,
insurance.
Then I wouldn't have to pay my taxes next month. Great.
That'd be fantastic because we paid our house off, so we now have no mortgage.
Oh, really?
Yeah. Do we have to pay
That's
our
a new
door?
development.
Yeah, a couple.
Ah.
You know what? If you could,
You have to pay
you're
the door
welcome to take out a mortgage and just pay our houses.
I could do that, but
do that.
Mine is paid off, actually.
yeah, his
so.
is paid off.
Oh,
We're part of the paid off.
Well, then
mortgage
both
club.
of you can
We're in-
take
we're in-
out a
we're in a
mortgage.
club over
Mine's
here,
not
Al.
paid off.
we were told that somebody said if you're supposed to paint your door red when you don't have a mortgage.
You told me that before. My door is still
Oh,
not.
it should be a lot happier.
You know what I should do is unload the home and get them bardominium.
You should.
There you go.
Barndominiums are fantastic. I have a half a barndominium.
It's gorgeous.
Here we are.
Yeah, just half.
It's a bar dominium.
It's a bardominium.
Speaking of bars, are we doing shots this episode?
Hell yeah.
All right.
We didn't do it last episode. And
All right.
speaking of bar, there's some changes coming here too.
Ooh, I look forward to that.
What are they?
We'll show you on the break here.
Yeah.
All right. It's
Let's
gonna be
figure out a
new
shot.
Bar. All right. We'll be right back.
We'll be right back. We back?
Yes.
It hasn't
We're back.
stopped recording.
Well, I just want to make sure we pull in at the right time. So Brian has picked out a great tequila from Almar del Jaguar, or what they call Jaguar.
Jaguar, right?
Jaguar.
Mhm.
And this is McCulley.
Culkin?
Nope. This is McCulley's company, and I just forgot his last name.
Sorry, McCullough.
So McCulley's a bourbon guy who got out of bourbon and created tequila. His uncle is the purveyor of the largest jaguar conservation in North America. So helping keep the jaguars of northern Mexico and Southwest United States alive. So a big portion of all of the proceeds, profits from this go to that program. And you asked the question before we started, why is this one clear? So all tequila comes out clear. All tequila starts as a blanco. That means it's been aged for 2 months or less in something, a barrel. And then the next one is a reposado. Means it's been aged from 2 months to a year in some kind of barrel. And then an añejo is aged from a year to 3 years. So your color comes from the barrel, right? So this hasn't been in a barrel. And this is a 101 proof tequila. Crazy master Sergio Cruz came up with this idea of a blend between a wild fermentation with fibers and champagne fermentation without fibers. And they blended that together to make the regular Blanco. And they realized the fermentation, the wild fermentation with fibers had a different taste all on its own. And it tastes different based on the time of year that it is actually fermented. So this one was fermented in the spring of 2004. That one up there is this fall of 2023, and it tastes a little different. So they put this out as a special edition. And Brian unknowingly poured mine in one of Alex LaCroix's Siempre glass. So Macaulay, I'm gonna finally have some great tequila in a Siempre cup.
Here we go.
Alex better not hear me say that.
Hello,
So,
Alex.
This is really good stuff. The nose on it is really good. You get a lot of citrus and coca agave and pepper and some fruitiness.
It's amazing how different this
Get
is
the
from
citrus
the other.
and the pepper.
Did you?
I did,
That's awesome.
because my nose is working.
And the taste on this is phenomenal.
That's a little different.
Yeah,
compared
so
to the-
you're looking
it's,
at
it's
Highland.
more of like a peppery.
I got some peppery in the finish.
Yeah.
A little
A little
lime,
warm.
a little limestone, like a little minerality that's really thick.
I didn't know
Some
that was a
citrus.
word, Brad.
Earthy.
Earthy.
It's actually called petrichor. So
Okay.
it's the smell or taste of like wet concrete in Florida. When it rains and the sun comes out, you get that smell of the concrete. That's actually called petrichor. Is the name of that smell, and you get that in a lot of tequilas. This is one of
Well, how many bottles did they produce for that period? Like,
I don't.
is it marked?
I usually remember things like that. I mean, it was a very limited release, but
Okay.
it was probably in that 10,000 bottle range.
We haven't
would
had
be
a
my guess.
jaguar in a while.
So we haven't. I haven't had that in a while. I haven't had that since I was with Macaulay in Chicago, and that's such a great tequila. Like that's,
Glad I could bring that up.
gosh, it's so good. I
Glad
forgot how
could
good
bring
that
up
was.
for you. All right, Al, I got a question.
Yep.
Brad is a mortgage guy who sucked at math in school, and it's amazing that he is where he is. Were you a math guy in school?
I would say mediocre.
Okay.
Yeah, I've always liked numbers,
Okay.
and it just kind of fell into this industry. Kind of just fell into this industry, like
Has this been
30
your
years ago.
only career?
pretty much. Yeah,
Wow,
just
okay.
30. Yeah, I've been doing this over 30 years and kind of fell into the so-called sales role. Right? It was one of these, and I've told this story 1,000 times. It was
Not on our show.
no, I did not. But it's like, I got hired in as a mortgage processor. I think it was making $9 something an hour, raking it in.
Wow.
Doing that, and it was back then, 30. It was
Yeah.
all files. It was literally paper
It was
files
paper
and
files.
paper.
Yeah.
So all of a sudden, these files would come through in the desk. I'm like, man, Mike's name keeps showing up on these files. Another guy's name keeps showing. I'm like, I think there's like 30 to 40 files of different people, whatever. And sales manager at the time, a shout out to my buddy Brian View,
Hi, Brian.
brought me into this into the sales role as a loan originator in a call center atmosphere in the 90s, refinancing people from 12 to like 10%.
Yeah.
12 to 10%.
People whining about
But it was
6.3.
like 96, 97?
No, it was started 94, 95, something like that. 94. I think it was 94.
So 98 was or 97 was my first year, and a lot of 12s.
So, but it was wild, but it was also my first taste of commission earnings.
Hey, all right.
So now it is my first taste of kill what you eat. And it, fortunately, make a long story short,
Too late.
loved it. Loved the
Yeah.
career. It's been rewarding. It's had its definite ups and downs, seen pretty much everything. Like many of us, we've seen,
Man, I bet you were a stellar loan officer.
but it was, I think it was all right. I mean, made a good living. It was,
Yeah,
it was
I
good
don't
for
know.
a short time.
You're so good at what
Nope.
you do. I can't
It
see
was-
you not being a great
But the
one.
numbers, getting back to the numbers, right? The numbers started all of a sudden just kind of making
sense.
Yeah, it's just kind of like,
Yeah.
oh, this goes here, or you spend this amount of money, long term, and everything. That's when you're depending on the computers.
That's okay.
Like the computers will tell you do this, and you're good. I just, yeah. But I like the business to business end of it. I admire you guys dealing with the end consumer
people?
because the amount of patience and guidance and direction that it's constant.
Wait, do you think I have patience?
With that smile, you do.
The people on the other end of the phone don't see the smile. They can feel it and know it's there. But yeah. Well.
Al's been on the end of some phone calls, I'm telling you.
Oh, okay.
Yeah.
And he knows it's never personal.
No.
Ever.
I mean, I think that's a great thing about any of the friends, business relationships that we have, right? You can lose your shit.
Oh, yeah.
And be okay. I mean, be okay. You could be completely irrational.
I've lost it. He
Yeah.
found it. He grouped it back together and threw it at me.
So I think it's, you know,
I bet Matt Braun has some stories about you and losing your
Matt
shit.
Braun loses it worse than I do, doesn't he, Al?
Oh, we know you don't watch Matt, but hi.
Matt goes off the deep end, and he goes 0 to 1,000 in 36 seconds. It's amazing. Takes me about 4 minutes.
That's awesome. Well, as a former math teacher myself, you know, I'm always curious, you know, do people like math and do they turn that into some sort of a mathy kind of career? Do people suck at math in school and not do well in school and still turn out to be a math person? I think it's pretty cool.
You know,
It
I
is
think
cool.
I think math and what Al and I do is the same as the math that you do.
Oh yeah.
It's more about how do we connect with this customer and deliver a service. And the math that you would do or the math that I do is it's just
numbers.
Yeah, it's the waiter dropping the food on the table. It's not what makes a waiter great is how they take your order.
Yep.
They remember how they talk to you. That's really what we do.
But I also think you know, sometimes it goes a lot deeper than that because you can actually, you'll know your customer, your client, you'll know their story, and many times you can probably relate to that story and kind of understand, okay, this is what they're saying, but what they're in, the lives that they're in may not fit, and maybe you show them a different vision, a different picture as to what that is, right? And we're not talking buying the biggest and baddest home. We're not talking buying the least affordable home. We're talking, you know, okay, what will work, you know, goes from school systems, dynamics of the family, to dynamics of their job, location. I know all of that. All of us take that into consideration, right? Even when I talk to you about doing business, I know what will work for us. I know what will work for you. I know when, say, Brad, you're not working with us right now.
Right.
Brad, I expect you to work with us now. Right. So it's all,
I need that conventional side to come in there.
Yeah. But I think it's all of it. Right.
You know, Al and I's conversations for the past several years have been, hey, how you doing? How's it going? Like business is the expected thing. I expect to do business with Al. I want to do business with Al. And we're more concerned about how things are in life and have more of those conversations than anything. And knowing that you were an LO before, loan originator,
thank you,
loan officer, it makes me understand why you're able to understand when we do lose it. And you understand we're just fighting for the client. And one thing I've always appreciated about you and what you do is you fight for us. Some account executives, you know, like the underwriter will say things like, oh, well, if you've had a job for 15 years as a fireman, that income doesn't count. And then a loan officer or the account executive goes, oh, yeah, what do underwriters say? And you're like, no, wait a minute. This is so ridiculous, right? And I use that as a ridiculous thing because there are a couple of account executives that I have that are like, oh, yeah, that's what the underwriter says, you know? And you'll go, no, I call bullshit. I'll call you back. And the next thing you know, somebody's doing it right, you know?
Or it's like, no, really, Brad? No, really? For real. Hell, no. I'm like, come on. Yep. I'm like, okay, fine.
Then he goes, underwriter really did say that shit. I can't believe it. I got it fixed.
I feel like we need to get an underwriter on the show.
I don't think they come outside.
No, they need more vitamin D.
And I don't believe they speak to actual humans. I think if we had an underwriter on this show, we would have to email them every question and then wait for their email response. Was that right?
Maybe we just give them the questions in advance.
Yeah.
And then fuck it all up when they get here and just make it up.
They still wouldn't talk. They just go.
That's a no.
It's a no.
That's a no.
I sometimes think an underwriter's job is going to turn this one down and bust somebody's dreams before they ever open the file. But
How
I know
can
that's
I
not
bust
really
their
true.
dreams today?
Did you feel like that as a loan officer sometimes?
Yeah, I mean, it was also very different.
It's very different today.
It was very different. The expectations were, I don't know, they were a lot easier. Like you can actually coach and consult. Now it's a commodity. Now it's like, what's your best deal?
Yeah.
Not even the process of buying a home sometimes.
I miss the day of standing in an underwriter's door and going, okay, look, I got a scenario,
Let me run this by you.
And now again, they don't want to talk to you. They're like, oh, well, the underwriter's on quiet time from 9 to 6, like only 6 days a week, and they don't work on Sundays. It's like, okay, I'm never speaking to that person.
Can you pass along the best?
Yeah, and the constant emailing it drives me crazy. But hey,
Well, Brian, I got a question for you. So,
yes, sir.
I'm curious, in this environment that we're in right now, I mean, what is a game plan look like? Let's say 3-6 months, maybe going into the spring, right? Because everybody, it's cliche. Oh, spring season's coming up. We're going to be,
We're gonna be busy.
homes and blah blah blah, right? So,
Yep.
but is there what's happening?
So I'll speak from, I guess, my viewpoint of it. My goal right now is to educate people on what's going on in the market. And hopefully, we had this conversation on the last episode, this isn't the type of job where it's an impulse purchase. People got to think about and believe in, okay, now is the time I want to jump into this. And so my job right now is to educate people on, okay, yes, you can afford to do this. You can't be scared of what's going on, whether it's interest rates, government, affordability, anything like that. And just kind of keep, I'm going to say, hammering away at that. Aside from that, I understand that there are going to be people who hear the noise of seasonality slowdown. Now's not the time people do real estate, so just wait till the spring, because that's real. And speak to those people with the expectation of, okay, what does your future, if it's going to be 2026, what does that look like for you? And what can we start doing now so that when that comes around, or the right house comes around, here's what you need to be ready with to jump in.
So that's great. Yeah.
Oh, thanks.
I mean, well, the thing is, you don't hear that enough. And I think it's the coaching. It's all about lining them up for success, right?
Yeah, for sure.
It's pairing them. It's like, oh, so you're thinking about buying home. All right, let's talk about all the minutia and move forward. And if we can get through this, then okay, maybe we're ready.
And one of the things from your guys' standpoint is I encourage people to talk to a lender and get, whether it's pre-approved or at least have, get your numbers, because so many people get bogged down in interest rates, talking to their parents, talking to Uncle Joe who's giving them bullshit information. And when it comes down to it, the interest rate doesn't matter. It's all about, can you afford the monthly payment based on the interest rate that it is now? If in the future rates come down, whenever that might be, if it works for you, then you have the opportunity to refinance. But that's a bonus. If you can afford the payment that you are able to afford right now, yes, now is a good time to buy a house.
So are you going to get your NMLS license?
Maybe I should, because maybe that's where the money is. I don't know.
You'd love it on this side. Right?
You do both. Would I?
Well, you'd have to learn how to do something that you don't have to do today.
What's that?
Kiss a lot of realtor ass.
Yeah. See, I'll be honest. My outreach to clients is more text-based and social media-based. And so knowing what Brad goes through, where he's making many, many phone calls on a given day to people, that's really not my wheelhouse of things to do. So I'm not sure that I'm coming over to the NMLS.
Or like
side.
I told you, my favorite realtor thing, right? Hey, Brad, this customer's been turned down by every bank. Can you see if you can get them approved? Sure. Okay, I'm emailing you a pre-approval. I got them approved for $225 FHA. Any chance they can go conventional and around 300? No.
I mean, the cool thing though, right? It's at the end of the day, it's that introduction, that potential relationship build, right? It's, again, glass half full guy.
Hey, I work with great agents. I mean, I really do. I'm not saying that.
I agree.
Brian, I have some
I
great
hear
realtors.
the people that you talk about, not only from the Sean Daniels group, though I know you and Sean have a great relationship now. I'm going to take credit for that.
You should.
But you work with some really, really good agents.
Yeah, I work some some of the top guys. And my favorite ones, honestly, are some of the ones that have been doing this for 30 years because I don't have to call them. I don't have to call, and go, hey, how's things going? How you, I'm their guy.
Could you stop calling me?
No, because I talked to you about other things.
Dang it.
Come on.
Every day. Well, not every day. A couple days a week.
Every
Brad will
Monday.
call me up. Hey, just making my realtor calls. In my head, I'm not joking. Why the fuck are you calling me?
Sometimes I'm just bored and I know you're going to answer the phone.
I will. And we talk about fun stuff.
We're talking about good stuff.
Yeah.
I'm like talking to you. So there's some realtors that I don't want to have that conversation with. I'd rather talk to you about the podcast because we're both going to become internet famous someday.
One of these days.
Working on it.
It's happening. You know what? The Al episode here is going to boost us.
It's our trajectory to the top.
Oh,
This is my first podcast.
Hey.
First podcast, and which I appreciate the invitation.
This year, our 103rd.
This is episode 103 or 104.
Yeah.
I was skeptical for like 5 seconds.
Yeah.
Then Brad sends me a text. Yeah, we have you on at 7.
Yeah. He said, well, I don't know. And I said, that's okay. You'll be fine.
Yeah.
And then I have you scheduled for 7:00. Does that work for you? And he's like, yeah.
Yeah.
Well, I will say you're terrific. And I'm going to toot our horn here a bit. We have been told by multiple guests that we do a good job. We put people at ease, and it's really, just having a conversation.
Yeah, very comfortable.
And that's kind of what podcasting is, to be honest. It's just having a conversation. But people do wig out over the fact that there's a camera there.
They do.
There's a microphone in front of them. But, you're very comfortable. You're doing a great job.
No, I appreciate it. Well, the hospitality and also the
beverages help.
The quality of beverages.
Yeah, beverages help.
So,
and for all the people that are nervous out there that used to watch the Brady Bunch and know what to do when you talk in front of people, we're not wearing pants.
That's false. I am wearing pants.
Commit to the idea.
I'm wearing pants.
All right, we're going to wrap this up. Al, thank you for coming out today, all the way from Michigan.
All the way from
thank you.
Detroit. Detroit Rock City. Bob Seger, baby.
Gosh.
Come on.
Are you a Pistons or a Lions fan?
Lions fan. Actually, I'm going to the Monday night game.
Sweet.
Yeah, that's awesome.
Who they got Monday?
They're playing Tampa Bay.
Oh, that's a big game.
Yeah,
Tampa Bay's rolling.
Do you know the Pistons song?
I'm Piston shorts.
Yeah.
I know the.
Shorts?
It's like a.
Piston pants.
Yeah, I'm not going to sing on the show, but
Piston beer mugs.
Comedian, famous for the Bob and Tom shows. Name now escapes me.
That does me too.
I think I've seen him on stage though. He's pretty funny.
The Pistons song is good.
All right. Well, thank
Final
you for
countdown.
watching.
Yep.
We will see
Cheers.
you next time on Indiana Success Happy Hour. Thanks for watching. Cheers. Another good one.
We should add that bell to the show.
Closing deals and cracking jokes, lender stall and buyer's ghost. We vent, we sip, we laugh, we think. Real